In the beginning of 2011, the gross receipt taxes was 4%. As time went on, it increased to 4.5%. And now legislation was passed recently for it to increase now to 5%. Is increasing the gross receipt taxes to 5% going to solve the territory's financial issues?
No, not by itself, not at all. The gross receipts had been at 4% for over 20 years. And we increased it initially. I'd gone for an increase at 5%, and it was determined that let's go for 4%. There's no way. The government is similar to any business. Any way that you manage your personal finances is to manage how much comes in and how much goes out at the same time. It's on a wider scale. You know, it's 5,000 general fund employees, 2,000 federal employees. You have over 13 departments. You have various agencies that you have to provide grants to. You have community organizations that depend on you with respect to, very important areas, homelessness, mental health, extracurricular activities for children, sports programs. So we have to manage all of that. And there's no way to be able to manage the government by just increasing revenues and thinking that taxes are the way to do it, nor can you just manage it by continuing to always cut. You have to find that right balance in between. And the balance that I was trying to find is one that looked at recognizing that the gross receipts is a painful tax. It's a very regressive tax that hits at multiple levels. But it's also a tax that right now, until we make a change, and we're going to look at making a change, at least study making a change with a sales tax, it is the one tax that we can borrow against, that the market feels comfortable about. So our strategy was to increase the gross receipts, which has not been increased in a while, go after delinquent accounts that have not paid the government in years, whether it be property taxes or other taxes, but also at the same time reduce our expenses and manage our expenses. So we're looking for that right balance in between. And I recognize that increasing the gross receipts has an effect, particularly on small business, particularly with respect to competitiveness. On the other hand, I think one of the things we have to recognize in the Virgin Islands is that by comparison to other jurisdictions, we only have one level of taxation. If you look at most cities, most states, most counties, or other jurisdictions, you have 2 or 3 levels of taxation. You may have a city tax, a county tax, and a state tax, and couple on that you have the federal tax. So you have multiple levels that you can collect on. We have one level. Because we operate on a mirror tax system, which means whatever the federal tax is in the United States, that's what we mirror. We basically ebb and flow according to tax policy, except for the gross receipts and the real property taxes. And for many years, we were not collecting on the real property tax. We were finally able to get the district court comfortable with the process that we're looking with respect to real property tax appeal. So if someone wanted to appeal, how we would go through it in an equitable and a fair fashion. The assessment process we were able to finally address, which had been in dispute in the courts for a very long time. And by doing all of that, we think that that's the way we'll be able to fill the gap. But I do not believe by any means that strictly taxation is a way to do it in terms of closing our gap.
Okay, what is the government doing to collect outstanding gross receipt taxes from businesses?
Getting everybody mad at us. It's an area that has been ignored for way too long in 2 ways. One, by those businesses that have filed for business licenses and just aren't paying, and also those businesses that are operating and haven't registered. So we have a 2-pronged problem that we're trying to address. With respect to current collections, we are handling that through the Bureau of Internal Revenue, which is their responsibility. What we worked on with the legislature in the markup that we did for the last budget is to get authorization to create a tax collection committee task force. And that task force will be comprised of revenue agents, financial analysts, and also an attorney. And their sole focus will be to look at taxes from 2008 back to 2000. Corporate income, individual, withholding, and gross receipts taxes. And just focus on collecting those areas. And the aggregate of that area will more than pay on a return on investment for the amount of staff that we're putting there. And we've begun to see some success in that area. We're also aggressively going after real property in terms of collecting there. But our objective there is not to take anyone's property. We're hoping that individuals that owe us will come in and at least work on a payment plan, because we understand the value of real property and to a family, to an individual. And if we can work a plan out with them, we will work a plan out with them with respect to that. And we're hoping by having that level of consistency, it'll send a message that we're serious about our tax collections. At the same time, we're looking and cross-referencing businesses that now exist. If X business is operating in a particular part of the island, we will then look at that business, see if they're at the Department of Licensing and Consumer Affairs, cross-reference it with corporations and trademarks at the Lieutenant Governor's office, and then see if they are registered at the Bureau of Internal Revenue. If they fall out at any one of those, then we're going to target that business.
Okay. Last month.
Which doesn't make you popular in any way.